Andy, what's going on?
Thank you, Scott. Hello, everybody. Hello, Andy.
Hey, Steve. Just a reminder, man, if I disappear, it's because I'm having some pretty gnarly weather over here, and
Thunderstorms.
I've already
Yeah,
been dropped to my internet a couple of times, so bear with
yeah,
me. Yeah,
that's life in Texas. I hear you.
yeah, that's right.
All right, guys. Well, thank everybody for showing up for the next trade of the week. We're on a shortened week here, obviously. Wonder how many of you logged in yesterday waiting for the market to open. I'm sure there's a few of you. That always happens. We had a few people email us, why aren't my scans working? But nonetheless, happy short week. We're going to kick the week off here with our Tuesday webinar, Trade of the Week, which was an interesting one. So we've got a lot to talk about to get to for sure. Again, yeah, thank you all for using the questions panel. I've got some dedicated content. We'll get to that in a second, and then maybe hold your questions until we look for some questions. Trade Ideas is a publisher. We are a content publisher. I'm going to put Scott on mute.
Muted.
We are a content publisher, and we are not a registered investment advisor. We are not brokers. We are not soliciting any investment advice. So what we're doing today is showing off our technology, giving you a couple of ideas that Andy and myself may have for the market. But again, none of this should be construed as investment advice. So we're a software as a service company. Nothing but content providers here. You guys got to pay the fees and talk to the fiduciary experts. All right, that said, quickly, you guys know the drill. Not alone with Trade Ideas. One of the reasons we are growing and we have such good customer retention and feedback is the amount of onboarding we give them. And there's going to be some changes coming up, but I'll just kind of go on with what we've been doing and what is going to be happening. The live trading room, always open. This is Barry Anderson. You do not have to be a Trade Ideas subscriber to join this room. Just go to our website and look at the top navigation bar for free trading room. He's demonstrating trade ideas. He's trading his own account and managing and moderating a live trading room of a few hundred people, sometimes 500 or 600. Not too many people can do that, and Barry does a great job of it. So if you're not in that live trading room, that's kind of the place to be. We have our 4 webinars during the week, our marketing webinars. Yesterday was a holiday, but normally that would be Jamie and myself. On Tuesdays is the trade of the week, where we go over the trade of the week that came in your email inbox on Monday mornings or this morning for the holiday. Wednesday is Dan and Brad taking some Q&A, talking about the platform. They're always about 3 months down the road, so they can kind of give you an idea of what we have and what's coming. And then Thursday, Andy takes the helm and gives some, drops some really good trading nuggets and always works up some really good content to keep the hour interesting on Thursdays. And then Friday, support sessions. This was a majorly good call. We're available for 3 hours every Friday from 11 to 2 Eastern. Just get on our webinars and you'll get an email just like you got for this one. You'll tune in like a go-to webinar, just like you tuned in for this one. And it's open forum. It's just question and answer. There really is no slideshow and there's no ongoing content. So just to know, we're doing one-on-ones still until March 5th. March 5th is going to be a big switchover for our education and how we handle the education for our users. We're going to a classroom setting. We're going to break it into 4 different classes, a couple of basics, an intermediate, and an advanced that'll run Monday through Thursday, and then we'll finish up with the Friday open support session. But we're still on the drawing board on that. I just want to kind of put that out there so some of you guys are aware if you're using the product and you might be waiting for a one-on-one that come early March, we're going to start having some group training sessions. And so keep an eye out for that content as it slowly comes out in the near future. Subscriber growth, everything that I just mentioned is one of the reasons that people are excited about our product and keeping our product. And so this graph really needs to be updated. It's up here in the blue now, I think in the stratosphere of subscriber growth. Brokerage Plus is slowly coming to fruition, still in beta phase, but for people who are not beginners, okay, if you're intermediate or advanced and you want to play around with the idea of using Trade Ideas alerts to auto trigger and auto trade, well, you can connect through Interactive Brokers using their IB client, and our Brokerage Plus platform basically allows you to do auto trading. We actually just hired a newer person, the newest person, whose name is Michael Noss. Some of you may be familiar with that name. He is an expert at custom formulas and an expert at Brokerage Plus. So he is going to be there and ready to help us in the support section of auto trading when that time does come. All right, next slide, man and machine. Might as well just finish up with this. No man is as, let me read this. No man is better than a machine, and no machine is better than a man with a machine. And that's who we are. We are humans instead of machines, but we work with machines very closely with a human discretionary approach. And that's really the best of both worlds, according to Paul Tudor Jones, who I would listen to anything that man has to say, because he's a pretty big swinging guy. All right, so the agenda for today, we'll look at the market recap. The Qs were strong for the most of the morning, but we'll take a look at how the rest fared. And then we'll go into the Holly recap. Very quiet day for Holly. Again, the canary in the coal mine theme. The trade of the week was SDS, so kind of unusual, kind of unorthodox, but we have a complete reason for walking you through how we came about this. I want to remind you guys about the ebook. And the flip feature, we're going to take a trend change lubricant. We're going to take a bullish scan, and we're going to flip it upside down and show you guys how easy that is to flip even your scans upside down to use in case of a market change, and you want to just have things easily flipped upside down. And it's much easier than doing it that way using the flip button, so we'll come to that. All right, so I started off, well, I always like to start off with the S&P 500. Well, what did we talk about last week? By the way, right here, this is where our ebook came out, and the ebook has to do with changing markets. When a buy the dip market no longer works on the upside, we've all been around here long enough to see a few of the cyclical markets break and turn and change their complexion, and it might be what's happening here. We'll discuss this in depth today. But our ebook was pretty timely. It came out right at the top here. I'll mention it maybe once or twice, but if you guys are curious what I'm talking about, if you go to the chat window, there's a link in there for the ebook on how to download that ebook. It'll basically look something like this. Okay, you can just come in here and click and download. You can come and see what we look like and all that. So that's the link if you're interested. And in that ebook, we talk about some playbooks, some plans, some game plans for a market that doesn't want to continue to go up. And that's why it's a really nice segue for kind of the trade of the week this week, which we will get to. But for this segment, we're talking about the market. What's the market doing? Okay, so we had a big break back here, and we lost our moving averages, and we sold off on extremely hard volume. We actually got a 10 to 12% correction, which is good enough for the books to call it a bona fide correction, put a check mark there. And then we had, as we've said in the past, some of the biggest market bounces and the biggest intraday rallies can come in a selling market, because the conditioning of the people to continue to buy that dip is still prevalent until proven otherwise, and that's maybe what we might be starting to prove here. So a lot of volatility, a lot of action to start the month of February, and we kind of put in our low point on huge volume and bounce back up. Well, last week you heard me talking about some words like bouncing into the pocket, low volume bounce into the net, into the nets of the moving averages. Well, that's essentially what kind of happened on Friday. Look at this red line. That was the last of the nets to catch the price action, and that action itself is just like this price action was on that day when it couldn't close above the 50 and went back to lows. Well, we could not close above the 20 on Friday and pulled back and got kind of a little shooting star candle going on there, and albeit on definitely lighter volume than we saw on the sell-off last week. So it's kind of playing out, as I had said, guys. You know, the bulls are going to want to see a close back above this declining 20 and continued green candles higher, but they can't get a close above the 20. They couldn't on Friday, and they couldn't do it even come close to doing it today. So the winds of change are kind of possibly in the air. I got a couple caution flags raised, because this is exactly what I was saying the bears are going to want to see. And this goes back to the ebook. There's a chapter in there called Sell the Rip. Well, when buy the dip doesn't work anymore, you have to go to sell the rip. Otherwise, you're just going to get chopped to bits and pieces. If you try to be the guy that shorts this candle right here and waited for all of this downturn and momentum and down volume, and then you decide on this day right here, oh, we broke below this red candle, I'm going to go short right here. You're happy for about 5 minutes. Shorting momentum is really hard. Where the real money is made and where the easier mental, emotional stability comes is waiting for the plane to bounce. I'm using an airplane as an example, and kind of run out of airspeed here and start to buffet and shutter and then stall again. These are the entry points we want. So the S&P is showing nothing good for the bulls today. The bears are probably starting to salivate and lick their chops a little bit. Let's take a look around the horn. As I mentioned earlier, the Qs, well, they've been trading above their 20 for the last 3 days. So that's where the momentum, or that's where the strength was anyway this morning. The Qs went green first and went to their highs, and then they rolled over into the close along with everything else. So technology is still, holding this market up in terms of what's the strongest ETF right now. Well, it's going to be the NASDAQ, and that's going to be your technology stocks. The Dow, not so good. The Dow had a rough day on Friday, could barely hold its 50-day moving average, and today is back below its 50. So the Dow did not bounce with as much vigor as the Qs, and did not bounce with quite as much vigor as the spiders. And lastly, the Russell 2000 kind of had its own deal there. It had its bounce like everything else, but low volume right into the pocket and a couple of reversal candles. Again, the bears are kind of probably licking their chops here. Let's take a look quickly at the VIX and what it's doing. And it's slowly creeping back up. As the market was going, as the market was going higher here today, this midday move. I'll even pull up the Qs to give you a better idea. This early first half of the day move, the VIX had nothing to do with it. The VIX stayed positive all day long. And if we look at this intraday, you'll see that the VIX stayed above positive all day long. So, there's still little cues of items and nuggets to pick up. People are still buying insurance on this market in case we do roll over. Interesting also, and today in my alerts, a lot of my downside alerts were a lot more than the green upside alerts. And so that's why we're going to take this alert a little later in the presentation and show you guys how to flip some of these things. Andy, did you want to add anything on the market recap?
Yeah, Steve, it's you're putting back on the spiders real quick. Yeah, no, you covered it for the most part, very well. And we talked about kind of the daily on the spiders there, how we've had that kind of stretched rubber band. It popped back up to the almost exactly to the center, of the range there. Yeah. So there's your kind of reverberation, and we'll see what happens. We'll see if this market is going to, roll over and the sellers come back in. I still think a possible scenario could be that we kind of get sloppy and choppy for the next few weeks, but time will definitely tell.
Yeah, closing on lows probably would have been the best case scenario for the bears today. So what we got was a little spinning top doji here. So, it could just very well be consolidation over the next 2 days as well. I don't want to, get the short sellers too excited too quickly. Closing on lows would have been nice, but we're going to need another one of these red hot poker candles here in the next day or two to make this statement that the market, I think, is trying to make.
I'm nervous. I'm nervous if I'm a bull right now, for sure. You just maybe it's just a kind of working off some steam and going to consolidate, or maybe we could see the I wouldn't be comfortable either way right now.
But again, I want to reiterate, I know I've said it, but I want to say it again. Short selling is not necessarily fruitful on this day right here. After 5 or 6 days of being way overbought, and you think we're going low and we break yesterday's low, that's typical for that. Wash them out and bounce them out and stop those guys out. These are the entries we're looking for. The 4 or 5 days where it starts to run out of fuel and buffet and get narrow ranges and attempt to get above downward sloping moving averages, only to be failed by the end of the day close. Completely different than the context that we had back here.
Well, Steve, you know what? That pattern right there you're looking at is very similar to my pullback above the 50 SMA flipped. Okay, you have a stock now that's had several, up days, and now it's
probably when we should
back below that 50. Yeah.
Let's do that too. We'll do that too. So let's get to that point in the webinar here, because we're already 20 minutes into it. So that's our market recap for the day, guys. The bulls are not out of the woods yet. We're seeing if this is a dead cat bounce to be shorted, or if it's just going to sideways chop for 2 or 3 days sideways and then break back and close above that red line, well, then that's when the bears need to go, okay, maybe I'm wrong again. Maybe Lucy is pulling the football away from Charlie Brown yet again. But don't get stubborn. That's the point.
Yep.
All right. Coming into today, first thing I noticed, how many strategies? very few, only a couple, 3 longs and 1 short. However, that power hour short made me realize right off the bat that any shorting was going to be done in the final hour. So Holly was kind of playing with just a forehand today. For whatever reason, she only decided to trigger a couple longs, but looks like it was a risk off kind of a day, pretty close to the both of them. But for the most part, the ones that got stopped out kept going. The ones that worked pretty much closed about where they worked. So it was just kind of a quick in, quick out day. Trade count, extremely low trade count, 5 trades only. I'll tell you what, I'd like to see Holly go home tonight and take today's data. I'd love to come in and see about 2 or 3 short strategies tomorrow, just to give the AI a fair shot. If the market does go lower tomorrow, we could have some strategies that might be able to participate. But not a whole lot really to write home about today. Again, the market was not doing a whole lot, and Holly cranked out a few nickels here and there. But anything you want to add, Andy?
No, you know what? They're all pretty similar. The top 3 trades here were all what we call nickelback, which is very similar to quarterback. So we're just looking for a nickelback, and
Your pullback
yeah,
alerts.
some very good entry. Yeah, that's a pullback alert, contrarian, and you're looking for a pullback, and then a continuation moved. And in all 3 of those examples, I thought they were pretty risk free. I mean, you didn't. I shouldn't say there was no pain in any of them. Some of them did go 10 or 15 cents against you, but nothing that would scare you out.
That always allows me to, I like to bring up, and it's a fair point. Sometimes people might see a sunrise mover 10 minutes after the open fire, and by the time you're logged in and ready to go, it's 10 cents higher. That's a fair point. That's a fair criticism. Maybe you put a bid in a nickel lower, and a quick pullback will get you filled. But on ones like these, the pullbacks, the nickelbacks, the quarterbacks, the strong stock on a pullback, you'll see that you can actually get a better price than Holly. So it does kind of cut both ways, but I certainly understand that comment. Yeah, so not a whole lot going on today on the AI. I'd like to see a few shorts pop in tomorrow, maybe a few longs, a few shorts, and then let's let the market dictate what really wants to happen tomorrow.
Mm-hmm.
All right. Okay, where do we go next here? Actually, I know I want to show something. You guys see, this is my favorite new Fibonacci. I got a lot of retweets from this. This is a Fibonacci, the box and the spiral. You see a lot of that in nature sometimes. When you see a plant first growing, it comes out of a spiral, which is essentially a Fibonacci. Or look at your finger, your index finger, and straighten it and bend it. And you'll notice that the joints of your finger are in Fibonacci sequence. It's kind of amazing when you look at that sometimes,
really cool.
How nature and Fibonacci work together. All right, so back to the agenda, trade of the week. Okay, so again, I teased you guys with the ebook, and in one of the chapters of the ebook, it's going to talk about how to sell the rips. And that's basically what we had setting up today. And I didn't just, pull that out of my head. Here's the content for the week. All right. Here's the pullback above the 20 SMA. We're going to pull this out here in a minute and take a look at it. But this is what we had on Friday going into the close. The only things that were pulling back to their 20-period moving averages were the VIXs and the SH short S&P and the double SDS, which is what we took, the double, more VIX, more VIX, more VIX. So that was the flavor, really. I mean, it was almost like you couldn't call something like this because there was nothing really healthy in terms of stocks that were showing up on those, but a lot of the inverse ETFs that were getting ready to maybe signal, the inverse right here of the S&P rolling back over. If we're going to do it in the future, we're going to do it in a few minutes. We're going to take that particular scan and we're going to flip it, and we're going to start seeing patterns that look just like the spiders. And so the reason we didn't just say short the spiders or short Facebook or short something else is that there's kind of a mandate on this trade of the week. We understand some people are day traders, some people have a second and third job, some people want position trade, some people are trading their self-employed IRA, some people are trading their own IRA. In many cases, you can't go short in certain types of accounts. But the good news is what you can do is you can participate when the market goes down in general using a levered ETF, something like STS or some of the other ones that are out there. And just in case you don't know, SH is basically 1-to-1 on going short the spiders, but SDS is 2-to-1. So if the S&P loses 1%, SDSs theoretically should be up 2% that day. So it's a double inverse levered ETF. And so that was the reason it showed up on that that pullback to the 20 scan. It basically sat right. It felt right. I discussed it with Sean, with Andy, with Jamie, with everybody, and kind of like, yeah, this seems to be the right week to pull the trigger on that. Now, as I had mentioned in the bottom of the content, this works different for some people. If you're currently having open long positions, you can consider the SDS as a hedge. Andy and I used to do this all the time in our mirrored account at Ditto Trade a few years back. In order to withstand a possible pullback, we didn't want to get out of our longs, but if we put on some SDSs, it cushioned the blow as a hedge. And so a day that would have been a negative day, maybe it was a flat day or maybe even up. For the case of the people who don't have any longs and they're completely flat and they just want to make some money, well, the SDS basically means that you're going to profit if the S&P goes back down in a 2-to-1 type of fashion. That's funny. I never heard Ray Manzarek speak. I've only heard him play Wing. Somebody thinks I sound like Ray Manzarek of the Doors. We should ask Jamie. Jamie's a big Doors fan. So back to SDSs. With the ebook setting up perfectly, the chapter's right there. It explains the whole playbook of what we're doing. The pullback to the 20 was showing us nothing but inverse ETFs that looked like that. We didn't really want to call yet another breakout to the long side when we all kind of felt we were due for a pullback. So, these are the new market environments we see ourselves in. Last year was, relatively easy considering buy the dip and hold. But this year is going to be a little bit tougher, I think. We're going to have some tighter controls, some tighter targets, some tighter downside risks, and try and do some more stick and moves as we go forward this year. Anything you want to add that I might have missed on the SDS concept?
No, I love that. I love that call, and it has been easy over the last few years. But Steve and I both know, trading that account. I mean, we traded all kinds of markets, but. Yeah, it's getting tougher, and you have to add some other arrows to your quiver because you can't just sit there, and like Steve always uses a forehand all year long. I think this time you're going to have something else in your arsenal.
Yeah, if you're somebody who says, I don't want to short stocks, well, picture yourself on a tennis court, and you're going to favor that left side if you're right-handed because you're never, ever, ever going to want to take a backhand swing. So you're always going to be trying to play the game forehanded, and you can't cover the whole court doing that. So you've got to learn how to mix it up a little bit and play both sides of the market. All right, where to next? SDS and Y, Trade of the Week. Yeah, have you seen the ebook? Again, I already kind of went through that. Again, the chat window on your GoToWebinar handouts, actually not the handout, the chat window, click on the little triangle next to chat to open up that window and you'll see a link. That link takes you to this page and all you got to do is just click there to download, but of course you got to give an email. But hey, you guys are already on the email because you probably wouldn't be in this webinar if you weren't on the email list. So the ebook. Learn it, live it, read it, get familiar with it because you might want to start taking some of the concepts out of that book if this market does not turn back around and do what it was doing last year. And I don't know if it's going to. All right, so flip the TCL. Let's do flip the TCL and let's flip the pullback to the 20 SMA. And I'll show you guys something. So the first one here is the trend change lubricant. We've used this one a lot in the past trades of the week. These are typically stocks that are, building a big base, but then are popping off their bases because of short squeeze attempts. But I don't really trust this scan the way this market is right now. These stocks are down for a reason, all right? The only thing that looks interesting to me on the upside I found on my squeeze me chart, which is MTCH. And if we look at that, MTCH had earnings 9 days ago. We got 52% short the float. Now, you're crazy if you're going to sit in a stock. Now, I don't care what the market's doing because this thing can have a mind of its own. It already had short covering round 1.0. What I see now is some consolidation getting ready for short covering explosion around 2.0. So some of you might want to keep an eye on the 52-week high of MTCH. If this thing gets a bounce and pushes through, just know in the back of your head that there are 52% of 46 million who are probably in complete panic mode, and they're getting ready to buy to cover, and that just buys and begets more buying and a perfect storm of buying. Before you know it, we might have a second short squeeze.
Where did you get that from, Steve?
My squeeze me.
Oh, you're
squeegee.
okay. Okay, I didn't
But
see the alert on. I didn't see the alert on there. Okay.
but you know what? Honestly, I didn't like anything else there. I mean, here's
Okay.
Mitch right at the top. Okay, that's the
Okay, I
one.
got you.
This one's already moved. You know,
Yeah.
W is playing games. You know,
Okay.
BOFI maybe, but you know, the trend change. I'm sorry, the squeeze me is where I'm finding this, but there's only one of interest in my
Sure.
book because it's got such high float. It's all the way at the top. It's had its earnings. It's not waiting for earnings. Beautiful short squeeze here. This is the anatomy of a short squeeze on the daily chart right there, and now it's taking its break. 2 or 3 days is all you need. If this thing breaks back above through tomorrow, might be a day trade in there for you, depending upon how much oomph it has.
Mm-hmm.
Okay, thank you, David, for the ebook, and he shall read it again and again until he has it memorized. Thank you, David. Okay, so here's what we're going to do, guys. The trend change lubricant, as I said, looks for stocks that are beaten up, and I don't really want to look for stocks that are beaten up in this market right now that looks like it might be trying to maybe continue a correction. So why don't we take this, duplicate it, and we have a working copy, which is cool. Go into configure. Notice this button right here. Flip. Well, every filter that was meant to be flipped, and I'll double check the short float, Andy, I know on that, was basically inverted to a different one. Oh, there's only one item on there. That's surprising.
Maybe because of the short float. Yeah.
Let's go ahead and take a look. Let's go to the filters and let's turn the short float, which they flipped it, and turn that off. Yeah, that does not need to be there. Everything else was flipped accordingly. There we go. We got a few more. So now, guys, so there's the there's the trend change lubricant chart of a downtrend basing and turning up. Well, how do we find the opposite? Stocks that have been trending up and now rolling over. Hey, look at that. So this is an easy way to come in here and say, okay, hindsight's perfect in this one, of course, but I'll try and highlight maybe a couple of levels of interest. That might have been a level of interest coming into today as it broke through there, even though I talk about, being careful about how you short momentum. It doesn't mean you can't do it. Just be very aware if they reverse that thing on you, don't let it go too far against you. All right, that's nothing there. It looks like earnings. That doesn't look bad. You can kind of see it kind of bounced up into its trend line, and today it had its big move down. This one might have some more meat. Matter of fact, I see a lot of support over here looking left. That could be an interesting level. Basically, that might be one to watch and put a trade alert on. Price alert. Oh, this one's looking a little upside down cup and handly, shall we say, right? All right, might want to put an alert on that one.
I want to add something to the psychology behind this pattern. Is you have to think about all the longs that are holding this. Now, I can tell you from the last two charts we looked at, put it back on that ARCB, at least, in that level you were pointing out so well there. So if I'm a long and I've been in this stock for, say, 6, 7, 8 months, and I'm seeing this develop here, I know my stop. If it breaks that level, more than likely I'm going to get out because it's breaking major support. So you can use the panic selling, get in front of it and ride that wave down, maybe to 30 real quick, So it's just a lot of times when you're thinking short, you got to think about what the long. The most of us are long players, so find a pattern where they may want to stop out or they may get scared and start panicking and getting out of a trade, and that's a good way to look at it. And Steve's right. If it fails, there's very little risk here because it's a continuation pattern. If it doesn't continue, you're getting out.
They're probably going to want to lift the rug down here below 3150 and see what's there. If it follows through and you're short, great. But if they wick it and bounce it back up above that level, don't give it too much. Please don't give it too much. It's a trap. It's a trap.
Exactly.
All right, so the last one on that one, what does that look like? That's not bad either. Okay, so probably looking down at these levels, I see a lot going on. I see a top there, resistance. I see resistance. Then I see support. Pivot line, anatomy of a pivot line right there. So that would be an interesting level to watch. This one coming up as well. So that's the flip. And Andy did give me a great idea because that's what's probably going to be on those inverted 20s right now. Let's take a look. So let's bring up the trade of the week, pull back to the 20 where we found this on the first place. I went past it, didn't I? Okay, so here's our alert. Let's take a look at what we got here. Okay, so guys, does this not look like the SDS chart?
Mm-hmm.
ProShares Ultra, because it's exactly what it is. Similar thing. What's this? Another ProShares.
Mm-hmm.
Okay, so still, look at these. These are all beautiful setups. My God, you guys. But what you got to realize is these aren't stocks that are going up. These are ProShares that are setting up for the market to go down. And this is everything we used to look for on the upside. Wow. So even coming into today, still nothing but ProShare inverse ETFs. Very, very interesting. So let's do the same exercise. Let's duplicate it. Let's flip it and see if we start to get some short setups. Configure and flip. And what do we get now? Okay. Oh, we got a lot of stuff. So this is basically the opposite of what we were just doing, pullbacks to the, oh my gosh. Okay, this is everything. This is where all of our stocks went. They're all bouncing into their 20s. Okay, I don't know. How would you sort this one? This is sorted by relative volume. Okay, there's a great visual right there.
If you want to find some that are closer to the 20, you could sort by a change.
Let's do that.
Yeah.
Let's do that. Okay. Yep. Those are okay, a lot of wicks there. A lot of more wicks bouncing up into the wicks. This is probably, if this market turns, guys, I'm going to tell you what, this is going to become a very valuable tool right here. Mm-hmm. You agree, Andy?
Sure, absolutely.
Because this is what we're talking about in the ebook. You know, waiting for that bounce and then hitting it. You are so much better off shorting up here at these levels than you are down here at this level and getting bounced out.
Mm-hmm.
So I hope that makes sense to everybody. We just basically flipped a simple alert that is a pullback to the 20, which just so happens to be showing every inverse ETF right now. So therefore, the thinking is if we inverted it and found stocks bouncing up into their 20s, this is what we're going to be left with, something like this. This alert here with a lot to choose from. That's interesting. I mean, look at that long tail.
Exactly.
I talk about all the time how after we see those washout bounces, we get 3 or 4 days of unmitigated volatility, and 1, 2, 3, 4 nice days, and then it starts to flounder again. So I really hope this is imprinting on you guys. Even that's a decent looking setup right there. It went to lows, bounced right back up third day, got caught in its moving averages, can't close near highs, a little bit of a wick. I'm going to drop this into the chat window just as it is. If I'm going to sit here and show you how valuable this thing is, there's no reason why you guys can't get a copy of this right now. Let's go back and change the title because it's flipped, and we want to.
Bounce. It'd be called bounce.
Pullback. We call it
bounce. Bounce below 20. Yeah.
Bounce to the 20 SMA.
There you go.
That's what we're going to call this one. And not only that, I'm going to save that to my cloud. I'm going to start watching this one a lot more. Save and share. All right, guys, so here it comes. Chat window. For those that want this and see the value in that, I'll title it Bounce Up to the 20 SMA and pasting the cloud link into the chat window. All right, so if you got access to the GoToWebinar chat window, you have access to the cloud. And it's probably worth it. It's probably worth it for me to show you what happens when you click on it for people who are not aware what to do with that code that I just posted. So if I click on it, there it is. Okay, it takes me to the Trade Ideas landing page. Look, there's our title, Bounce to the 20 SMA. Cool. So all we really need is either this red code, or the easiest way to do it is just grab the URL. Copy the URL, load from cloud, file, load from cloud. It's already pasted. All I got to do is click load, and there's my duplicate copy right there. So this is what you guys can bring into your layout, your desktop, and start monitoring this stuff. Because if this market doesn't change, we start going lower, everything we've been talking about today might become a lot more relevant in the near future because it's a lot different than what we saw buying the dip last year.
Exactly, and it's such an easy way to think outside the box. Let TI think outside the box for you just by creating an alert like this, simply by flipping on something that you already have. It just makes your job so much easier.
Think about it, the tool that could do. I mean, there's so many people that for 3 years they've been conditioned to buy the dip, and that works. Buy the intraday dip, buy the intraday dip. At some point, that's going to stop working. and it's human nature to keep kind of banging at it because that's what works so well. But what's nice is that now we've got this alert that can kind of nudge us and say, hey, we're in a different environment now. Remember how we talked about this? Maybe starting to fade some of these rallies. Maybe we want to start thinking about this, because trust me, the general public that's trading, their eyeballs are not focused for this kind of stuff right now. I mean, we are trying to be really early here. I mean, you're kind of going out on a limb. I told Ann I didn't sleep very well last night, guys, because this was a big call. I got up a lot and checked the futures a couple times in the middle of the nights. I really wanted this one to work because we kind of been, talking ourselves into it. But that doesn't mean it's going to work. Just because I want it to work doesn't mean it's going to work. So if the SPY goes sideways for 2 or 3 days, I'm going to start getting nervous on this call. I want to see a nice red candle back down tomorrow. So.
Yeah. Well, anytime you use a fading strategy like this one is on a daily time frame, you have to give yourself a little leeway, size accordingly, but then you have to define your stop and get out if you're wrong, if the momentum continues in the same direction. And that's what's beautiful about fading or any type of fading strategy. And let me add this. I was going to talk about this on Thursday, and I probably will again. It's a different game when you're not pounding momentum. Okay, when you're doing a strategy like this, it may take some time for the trade to develop. So I would recommend going in with smaller size. Anytime you're shorting, go in with smaller size, because when you do get that move, and more than likely it's going to be exaggerated and exuberant to the downside. So, but it's real easy to get impatient and get nervous because we're kind of wired to think to the long side, most of us, and you start thinking of reasons why the buyer is going to come in and shake you out. So just cut back your size and be patient. Define your stop and try not to look at it and let it work for you, because anytime you're kind of doing a fading strategy, it's hard to be timely. It really is. And sometimes you may have to go sit through a few wiggles and jiggles before it finally starts working for you.
Let me just add to that, because I know what Andy was trying to allude to, and he might not have touched on it completely. And that would be
like I couldn't get my point across.
No, you got it, but I want to try and really help you hammer it home. Was when you said take a small starter position. I think what you were trying to say is don't go running in with your full size to start with, right? Maybe take a half, get it on the radar, the trade's on the radar. Then when you see everything start to roll over, then maybe you can add to it and jump into it. So a lot of times we used to do that as well. We just call it a starter position, just enough to get it on the radar, 1/3. I was just trying to make sure that they caught that concept of that you can always start with a smaller size and add to it if things start to get weak and go in your direction.
It's a very good point.
That first lot will allow you all that sloppity, slippity stuff that you were talking about up here that doesn't always happen in momentum when you want it to happen right now, when you want it. You got to give it a day or two and have patience. This is where patience is a virtue. Okay. Oops, let's see. If I understand correctly, for stock bouncing up, we just have to flip this alert. Yeah, the pullback alert is what I flipped. What I put in the chat window there, Fred, was the flipped version, which is now going to be a short selling strategy. If the market continues to, if I shouldn't say continue, if it starts to show where fading the bounces is going to become the more profitable way to go, having this alert already set up will kind of help get you there half the battle. And yes, the trade of the week email, the SDS entry stand was just above Friday's high, so it's active. All right, guys, we got about 5 to 10 minutes or so. If you want to have any questions, we could do that. Let's see. Typically, Stan, we have a cloud link PDF, but I wasn't able to get it into this webinar. But if you want to email info@trade-ideas.com and request the cloud link PDF, we can get you one that has a lot of our favorite stuff on there. I apologize. I'll try and figure out how to get that loaded next time. Okay. Position in 1 minute Bollinger Band, I guess, is the nut of your question, Marcia. You're having success. You're liking the Bollinger Band filter. Well, what we have to do is go back and see what is the confines of our platform. And if we type in Bollinger Bands, we see that the most minuscule amount we can go to is 5 minutes. I know there's no plans to go to 1 minute. I don't know if they would even consider going to 1 minute. I don't know if 1 minute would even be beneficial. But unfortunately, the answer is 5 minutes is the shortest time frame we can go with on a Bollinger Band. Unless, I don't think there's any custom formula around that, is there, Andy? Probably not.
No, you can send something in to info@trade-ideas.com requesting a custom formula.
If there's the ability to build a 1 minute position in Bollinger Bands using the custom formulas, then we'll route that to the right person. But I don't have an answer for you here. But I want to make sure that we give you the definitive answer. So if you email that, we can have somebody else double check and get back to you on that. Can you flip any kind of alert? Good question, Marguerite. You can only flip the A window, or no, I'm sorry, you can flip the A windows, you can flip the T windows, and I don't know, I've never tried to flip an M window. Let's see.
You can only flip individual strategies.
Only individual. See, on the M window, we got to first decide which strategy, the up or the down. Well, we can go into the up and we could say, you know what, I could just go ahead and flip it, or I could duplicate it first and see if I want to flip it. What did I just do? I created two of them, didn't I? Yeah, I've created two. So I'm going to turn this one off. But you would eventually go back to configure. And as long as the configure window has a flip button, it'll work. So the answer is yes, you can flip just about anything that's directional and has the ability to flip. The squeeze me window, I'll drop that in there. It's normally, Jeffrey, it's normally on our PDF window. Again, you probably noticed it's trying to exploit massive short sellers sitting through 52-week highs, which is not advisable. It's a top list. Reconfigure it. It's pretty simple. Prices between 5 and 200. 200. Daily average volumes 300,000 shares. Here's the kicker right here: position in your range. Aside from the short float having to be 25% or higher, the stocks have to be trading in their 95th percentile of a 1 year range. So 0 is the 52-week low, 100 is the current 52-week high. We're snuggled right up here at the 95th percentile, giving us an early warning of stocks that are consolidating ideally and getting ready to go higher. And that's about as simple as that alert gets. It's a scan and it's a top list, and I'll be happy to drop it in there for you and anybody else since you requested it. All right, that one's called Squeeze Me. And paste, there you go. Again, you can just click on that link and follow the example I gave you all earlier. What is that? Sure, my thoughts on Walmart tomorrow. Well, Walmart, I know my first thought's gonna be, is after a stock has had earnings, bad earnings, what do you think? Now they're going to come home tonight and say, oh shit, and they're going to put in their market sell or tomorrow. So after a drubbing like these on earnings, no matter what the company is, please give it 2 or 3 days to really wring out the remaining weak hands, because more often, I've tried this over the years and it never ever really seems to work. It's a very hard trade to do the very first day of bad earnings. They're not just going to reverse on a coin. When they do, typically it's going to be in the first 10 minutes. You know, the stock gaps down and the market decides, hey, that was way too much. You get a big green candle coming back up. But if it's just going to wallow like this for the day, it's going to do that all day and probably tomorrow as well.
And Steve, something I could add to that, if you scroll out on the daily on Walmart, okay, you can see this is a brutal day, a lot of momentum to the downside, and I would be shocked if this did not make it down and fill the gap over the next couple of days.
Yeah,
not doesn't necessarily mean it's going to happen, but when you just think of it as a waterfall, you know, and there's the pull base down there at the gap. There's a real good chance, yeah. So to answer your question, Don, I think if you're short coming into tomorrow, you may have some extra profits on your, you know, you may be looking at some more profits. That's just my 2 cents, but.
See, I didn't catch that part on short coming into tomorrow. So if you're already short, then everything I was saying, Don, is kind of leaning in your direction. I assumed when I read that everybody wants to buy that first on sale dip, and so I kind of went off on a tangent there. But hopefully it still makes sense to you if you're short. I think there's definitely some more meat on the bones. Again, like I said, think of all the people, Don, that are going to come home tonight and just go, oh my God, are you kidding me? Now, okay, I got to get out of this. I'm going to put my stop in it. So it's just going to be more bleeding probably tomorrow. So I think you're looking good if you're taking it home short. Plus it closed on lows. Raul, whatever that was that you sent, I'm not sure, but if handouts, I'm not sure what that is.
Yep.
If you want to send it to info@trade-ideas if you need some explanation on it. I'm not sure. Let me copy it real quick and paste it and see what that is. It's the cloud links. Okay, that's cool. Thank you for doing that. I will. It's basically a link version, not the downloadable version. So for Raul's generosity, and thank you for presenting that, I'm sure you have a few people that are going to thank you. I'm going to put link to the PDF file in the chat window, and that link will basically take you to the aforementioned PDF file that we were talking about that has a lot of different strategies on there. So that'll be in the chat window. I thank you, Raul, for that. Much appreciated. All right, we got time for a little bit more here. Marguerite, the difference between an A window and a T window. Two main differences. One is in the amount of data. The T window gets a refresh every 30 seconds, and the timestamp will be up here. And if you'll notice, the T window in a configuration mode is nothing more than a set of filters. There is no event. There's no new high, no new low, crossed above, crossed below, block print, what have you. As long as all of these filters are satisfied at any given time, 30-second window, the stock is going to show up on here until the next refresh. So a T window is kind of a slower moving scan, and it allows you to double click and sort ascending by whatever column you want, or descending whatever column you want. That's the top list. Those are good for aftermarket scans and kind of a small list of things that you might want to keep an eye on and set price alerts. The alert window, on the other hand, is completely different. It's got its filters, but it also has to have an event. In this case, the event is a gap retracement movement. That's the algorithm. And the alert windows are in real time. As you'll notice, we have a timestamp, my Pacific time. It happened this morning at 7:17 and 22 seconds on the date of. And so those are in real time. They basically sit, the A windows will sit idly until there's an event that's triggered. And as long as all the filters in that scan are lined up, then the event will show up in your alert window. The multi-strategy window is basically just numerous A windows crammed into one. Thus the name multi-strategy. All right. Key. Gonna look at one chart here before we go. The question is, looking long, it has a short float of about 21%. I don't have the short float on here for whatever reason, but you can get those data points online for sure. Earnings in 11 days. It's going to run right smack into some pretty good congestion up here, probably around 8, maybe even sooner. Maybe around the 790 level, I would start looking for supply, overhead supply, to start coming into play there, Christopher.
Mm-hmm.
Thank you.
Other than that, is showing a relative strength on a on a short-term basis. Nice, yeah. I mean, it doesn't look bad. Possible turnaround candidate, but Steve's right. You're going to have some headwinds above.
Marcia, this will be the last question, and then we'll turn it back over to Scott. But her question is for the best alert suggestion for the best alert for a strong stock out of the gate. That's going to be this one right here. Mm-hmm. In the morning with a quick drop any time of the day, and can we filter for volume on that pullback? Well, what you're going to want to do, the first part of your question is pull this over. There's the PDF link that Raul was so nice to attach, and it's going to be, where is it? Extreme Volume High-Low Pro, right under Andy's name. Okay, so you just click that link and follow the instructions to get to that cloud link, and it's going to launch this alert window for you. Well, the reason I'm showing you this one is because it's going to show you stuff in yellow going down at the open really quickly, and it's going to show you stuff in green going up really quickly at the open. What could you do to possibly watch for that? Well, let's say you saw this one here early in the morning, VRLS, and you're asking, oh wow, this thing just made highs, but your question is asking for a pullback. Well, you might want to identify these one by one, and then maybe just set price alerts for levels of interesting pullbacks. Just create price alerts, and then it will trigger if we get a decent pullback, and then you can check the volumes. If it triggers, check the volumes, using the S window, and go forward. Otherwise, your question is kind of a if, then, and when, then. We can't really do that. We got to kind of just take it one block at a time. Another thought that you could do would be to create a top list, and as these symbols come through, watch what I'm doing here. You right-click, send VRS to a symbol list, and that's showing up on my other screen, which you can't see right now. So I could assign this to any one of my symbol lists. Well, you could have that symbol list running in another top list window, monitoring their volumes and their positions and their changes. And so as you see the ones that come through this window that you like, one by one, right click, send it to the symbol list you want, and then have a second window just pointing towards that exact symbol list, and then you can look at the different data points and follow the stock accordingly that way. All right, that's all I got. Andy, you got anything else?
No, well done. I think we should bring Scott in and.
All right, let's bring up the slides.
Unmuted.
All right, come on in, Scott.
Hi. Right, so hope everyone's subscribed to the podcast. We had a really good one last Friday with a special guest who just joined the company, Michael Noss. He talks a lot about auto trading and how he got into auto trading and automating trade idea signals. He's been doing that for a long time, even before we created Brokerage Plus and the interactive brokerage integration. So if you're interested in that kind of thing, it's a really interesting conversation. Make sure you subscribe to the Trade Ideas Podcast. Just search for Trade Ideas Podcast in whatever app you use. And then you can download last week's episode, and then this Friday's episode will automatically pop into your player when it goes live. Now we also have that book that Steve was talking about earlier. Make sure that you downloaded a copy. Just go to trade-ideas.com/ebook and put in your email. You get a link that'll pop it into your computer. We adjusted our rates, and now we have a discount code for you that's good this month for 15% off your first month or year of premium or standard Trade Ideas. You can get into Trade Ideas for under $3 a day, or you can get premium for less than the cost of a good lunch. So, what are you waiting for? Use that code, LOVE4HOLLY. It's all caps, just like you see it. You can also download a handout which contains these slides. Just go to the handouts panel and you go to webinar interface, expand that, click on the blue link and grab that doc, and then you can do this at your leisure. If you have any questions, email us info@trade-ideas.com. You can email Steve directly, Steve at, or Andy is Andy at. Follow Steve at Today Trader on Twitter, Dan Merkins at Trade Ideas 1, and follow us on Facebook so that when we post something cool, you can share it with your friends. We'll have a recording of this up later on tonight or tomorrow morning. You'll get an email with a link to that. So thanks, guys. Thanks, Steve. Andy.
Thanks, everybody. Scott. Thanks, everybody. Thanks, Steve.
Have a good one.
See you next time.
See you guys Thursday.
Bye-bye. Bye-bye.